Hello and good afternoon or good morning, depending on where you are. This is Ask Slim Live, trade planning session with Slim's analyst team. We have Matt, Arvi, and Katie with us today. Just want to run through our upcoming market week and live event schedule so you're aware of what we have going on. If you are a member of Ask Slim, you can also check out your dashboard, and we have a Ask Slim content and events calendar right on your dashboard for you to stay on top of our events and content schedule. So today we have a trade planning live event with the Ask Slim protege team here. And then next week, there will be no market week or live event, but RV will do his recorded market brief on an index update. And then on June 20th, we'll have Slim's recorded market week. And then Friday, either June 26th or June 27th, Slim will do a recorded market brief and an index update. So that's our upcoming market week live or market week and live event schedule. Okay, today's session, as we always mention, is for informational and educational purposes only and should not be construed as investment or trading advice. Your hosts for today are myself, I'm Matt, we have RV, and we have Katie. This team, together, we bring you about 50 years of combined experience as market participants, technicians, and active traders. With Slim in the mix, our team boasts over 100 years of experience. We love what we do. We have a passion for the financial markets and technical analysis and trading, and we love to bring you our knowledge and share all the insights that we have in the best way and most efficient and effective way we can. All right, today's agenda, we're going to kick things off with the member Q&A. So that is an opportunity for you to put some symbols into either the Q&A or chat. Let us know what you have on your mind in terms of an outlook period. So are we looking at something short term, let's say the next 1 to 3 weeks, or if you're looking at something more of an intermediate outlook, next 3 to 8 weeks, or even longer term, if we have that monthly analysis available, we'll do the best we can to share that with you as well. So if you have some symbols in mind, something that was piquing your interest, even this morning or recently, feel free to start putting those into the chat or the Q&A. After we finish that segment, then I'm going to go through the current market week special offer, which is level 4. I'm going to do that very, very quickly today. Then once we complete that segment, we're going to get into how we look at technical analysis and converting that key technical evidence into the details that are needed for trade planning with options. So I'll do a near-term and short-term outlook for IWM, and then Katie is going to illustrate how she can leverage that information, those technical insights, when selecting different option strategies. So it's a really, really interesting segment where you have a combination of technical analysis, trade planning concepts, and then seeing how an options expert converts that information to selecting some option strategies that fit those parameters. All right, that would conclude then the main live event today. And for those of you that want to stay around, I would suggest you do, if you have any interest in level 4, or if you just want to see me walk through a trade planning process using the level 4 content and services. I'm going to do some examples of trade planning workflows that I utilize using our tools here at Ask Slim. So I would suggest you stick around. I'll do a number of examples of that once the regular show concludes. All right, so that's today's agenda. We're excited to have you here in the audience. And let's get started with our member Q&A. So feel free again to continue to put some symbols into that Q&A.
So it looks like here, Matt, good afternoon to you. Looks like we have about a couple here. We have PLTR short term, MU intermediate term popping up.
Okay.
I saw Uber come across, VRT. Katie, please, let me know what you have. Um, I have PLTR, MU, looks like Uber. I think you have, right? So,
Yes, and I
um,
also have Vertiv. Needs
okay,
a bit of
awesome.
updating, but we can do that live.
Yeah, sounds good. All right, so why don't I start this off here, and then I'll hand it off to you, okay?
Okay.
Pull up PLTR. Very, I think, key action that we're watching here because growth names have been leading, right, off of that April trough. Growth names have been absolutely on fire. And that started to change a little bit. Okay, so let's pull up PLTR. I hope you can see that now.
Yeah, we can see that chart
Okay.
just fine.
All
Thanks.
right, cool, perfect. Yeah, so in PLTR, let's pull up the weekly chart first off. Formed this low on time perfectly, just like that one right there. Turned up. We saw that move turn up all the way from, sub 70 to 130, just absolutely incredible. Still overall acting fine here, right? Not showing any reason to be all that cautious. But on the short term, right? RS is starting to curl its way down, flattening out here, right? We've also lost this low so far just by a little bit at 119.41. Okay, so what are we looking at? Hide the drawings for 1 second. Trading range, okay, right there. If we can lose that low again, I'm going to be looking for this to actually get sold. But it hasn't done that yet. Okay, we've only looked at that low end of range and we have bounced back and we are squarely in the middle of that trading range. So we have to lose that low one more time here and actually close below it in order to set up a move likely on the downside. If we go ahead and overlay our drawings again, let me get my cursor back here. Okay, if we lose that low, right? We would see this curl its way down, and then if we draw on our fibs, what would we be looking at? Draw that from key cycle low to cycle high, and this zone here looks, I would say, reasonable if this can close below that low, okay? We'd be looking for a move like that, and then a series of lower highs and lower lows as it sells off, you can see here in PLTR. So, but absent of that right now, this isn't really, um, really doing anything quite yet until it sees a close below that key low. But keep this on your radar to the short side.
Hey, RV, could you pull
Yeah,
up the 2 hour just curious, just
yeah.
to
Pop
show
over the
that.
two. Yeah. So on the two, yeah. Feel free to
Sure. Yes,
highlight
you
live,
you
Matt.
had you had mentioned about if we could get that close below that low, and so what I wanted to just share was how we can use this shorter duration time frame then to help with a potential some clues into when that might be happening in terms of, like, right now we can see that we've had that bounce off the low, but
Mm-hmm.
on our bottom, that lower right panel on the bottom, that's our slim ribbon PO, and you can see it's trying to get back into the oversold. So that's a helpful tool to give you a sense of, you have a dominant directional component in terms of momentum. So right now on this near term, this 2 hour momentum, it's negative. And what we'll want to see is, can continue to rally and offset or neutralize this negative 2 hour momentum, or does it roll over and then it fires a signal, a continuation signal? So that would be like the first indication that there's some returning weakness to make another attempt at that low. Otherwise, if it's going to run again, you'll see it start to neutralize. But I think you made a really good point, Harvey, that right now it's sort of in no man's land.
Right. Yep.
Okay, very good.
Absolutely. Great job. Yeah. Um, so the other one I'm going to highlight here was MU just on the intermediate term. Okay, so let's just pop
Okay.
that up. Very strong action in MU. You can see off
Wow.
off of that low. Absolutely running here from 60 to 110 in a very short period. Okay. We have this old high back here at 114.80-ish. likely to move through that, and then you'd have to draw fib levels higher than that from this key high up here to that key trough right there. You can see there's a 61.8 around 120. That is also reasonable here on the upside in MU. So acting great here on the weekly chart, and that's what the overall question was. Okay.
Okay.
So do you have GME, Katie?
No.
If not, okay, no problem. Sorry about that, Terry. Okay, so go ahead, Katie. I'm gonna hand this off to you.
Okay. Let me share my screen. And let me know when you can see Uber.
Yep.
Got it.
Okay, great. So this is the weekly time frame. We've got an average cycle length here of how many bars? 34 bars. And we're fairly early in the rising phase of this cycle. We did tag this 100% extension level. So momentum has shifted on the MCM to a neutral intermediate terms. You can see these black lines. Perhaps this is the high already in, and I'll show you why that could be the case in a moment, or it can recover. We haven't certainly violated any levels, important levels in this time frame. But let's switch over to the daily chart, and you can see what has happened in here. We did have that move up, and then we dropped all the way back below, getting a close below this 78.6% fib. So it created a resistance zone that we have gotten up into today. We do have a cycle timing window coming up between June 20th and, between June 10th and June 20th. Could this be an early low? It would be very early, but I suppose that is possible. We'll have to wait and see how next week shapes up. But momentum in this time frame has deteriorated. You can see the reversal scout is negative, and we have gone from positive momentum to neutral over on the slim ribbon here. So if this is the case and this comes back down to retest this 78.6% fib or even lower to the cycle low support in this time period, then that would suggest that this next cycle will not be able to take out that high. And so that is why we have this as a possible projection that we've already seen the high in this cycle. But we do have a long time to go. This cycle isn't due to trough until out in the winter. So it has plenty of time to try to recover itself. But for right now, if I was going to be trading this, I would wait and see how this cycle shapes up, if we get a move back down, or if we need to shorten this up quite a bit and reflect this as a very early low. So that is the situation in Uber. Just to show the monthly time frame real quick, momentum in here is positive, and we are still fairly early in this cycle as well. The other one someone requested was Vertiv, VRT. Here we have a average cycle length of 36 bars, further subdivided into minor half cycles. We formed our intermediate trough right here. This was a negatively configured cycle, getting all the way back below that prior cycle low. That suggests that this next cycle will not take out the cycle high. It already is at the top of a resistance zone, so I removed that and am pointing now to this 78.6% fib because momentum in here is firmly positive, and we are still quite early in this rising phase. Over on the daily chart, here was that intermediate trough. I was trying to update this a bit. This is a swamped cycle and a basing cycle. A basing cycle is a positively configured one that forms after one or more negatively configured cycles. So let's go and do a draw off of this bottom and let's say this top and this bottom here, and we are looking at those levels. This 78.6% fib off the weekly chart is at about 134, and that would point to somewhere between this 38.2% and 50% extension level, with a possibility of getting even higher. So this one is bullish, and we have positive momentum across the board. And I think those were the only two that I had.
Okay. Terry had, I think he was the one who asked, or she about, was it GameStop? Is that right?
Yeah.
I'll take a look at GameStop. I'll just look at the short term. Terry, if you
Sure.
had another outlook period, and I'm just gonna pull up our our multiple time frame grid, and I'll look at the price action and the pattern structures here and see if we can identify some key levels for you. Just give me a second to pull up the screen. Okay, so we should have the multiple time frame grid here with GameStop. Up on the left is the weekly, then we have daily, 2 hour and 15 minute. This is our core grid. Now each one of us may tweak this from in terms of different time frames, or maybe a different indicator or two, but at the end of the day, this is the structure that we like to have when we're looking at short-term, near-term and analysis, and then looking at our trade planning process. So GameStop, I'm going to go over here on the weekly first. I'm just going to look at momentum. So the momentum condition on GameStop is still quite strong, right? The slope of the RS here is very positive. Now we had quite a reversal off of that key high around 35, and I'll just go back real quick here and see what kind of resistance it came up against prior to some of these other key levels that it had before. So it looks like it got up near that 38.2, which came off of that prior peak that was from 2024 around May, and then the swing low here in August got near that 38.2 and then has pulled back some. So this picture here is still overall positive. I would, on an intermediate time frame, just based on pure pattern structure, I'd have to see a weekly close below 26 to really tell me that this more bullish pattern has been neutralized. I mean, we've made the configuration here is positive in terms of a higher high. We had a higher low come into play. So that's a look at the intermediate. If I go over then to the daily chart, the reversal scout is just right now turning over, neutralizing, and you can see that the ribbons are starting to really narrow. So this is overall more of a neutral condition. But if we lost, this is similar to the first one that RV did, Plantier, PLTR, in terms of if we lose a low, that could open up the door to another wave lower. So Terry, I'm just going to take a look at where some key supports might be over the next few weeks. If that was to happen, then I'll look at an upside scenario as well. So if we lost this low here, I'm just going to do a swing from this key swing high. Whoops, I have to use the other fib tool here. I'll use our fib extension tool. So from this key swing high here to this low, and then back up to this resistance point where this is another swing high that it formed. And then that would suggest, I mean, there's some room here to fall if it got loose on the downside. The first stop might be near this 78.6 where there's a confluence of price action that occurred. So that, Terry, would be the first key area of support. And then below there, right around 27. So around 27.85 to 27 is where I would watch for some key initial support. And then again, really to damage this overall pattern, this positive pattern, neutralize it, would be that close below, that weekly close below about 26.50. Hopefully that was helpful, Terry. Oh, you're looking at short term. You just saw that come into there. All right, so let me just look at the upside situation, remove some drawings. So that was a good downside look. You can see also, if I'm in the 2 hour chart here, our MCI still positive. We're at a value of 66. So over 25 is positive. When you get above 50, it goes bullish, and over 75 is very bullish. And there's a little bit of a curl on the option bias indicator. It's gone neutral, which makes sense as we went through. On the upside here, Terry, if we got a breakout back above this swing here, right around 31, depends on how short of an outlook period you're talking about. You might see some resistance back at around 31.50, but definitely as we got closer to that 32.5 to 33, So in the short term, I would watch for resistance in that area there. If we get a close back above 33.25, that could open up the door to another run towards that prior high. All right, there's what we have for GME. And I hope that was helpful. You're welcome, Terry.
Matt, I'm just going to quickly take the screen back, and someone had requested NVIDIA.
Sure.
Okay. All right, so this is the weekly chart of NVIDIA. We formed our intermediate low early right here back in April, and we've got these. How long are these cycles? I like to always mention this for those who are trying to place cycles at home. These are 27 bar average cycle lengths. So this retracement of this move got back up through the 78.6% fib. So our next target level would be that peak at 153.13. We have rising support zones and we have positive momentum here. And we don't have another trough due out until late fall, early winter. Over on the daily chart, we formed an early trough here as well, just before the daily cycle timing window. And here is us pointing to that 153.13 level. Right now, it is kind of consolidating right around this prior cycle peak at 143.50 approximately. So with positive momentum, I would suspect that we'll be able to get up through there and make a run for this prior cycle peak here. And that was all I have on NVIDIA.
All right. Great job, Katie. One thing I want to cover is Bitcoin, because we're getting some interest in Bitcoin, and I think very timely. So let's pop over to this real quick.
Sounds good.
And then I want to show you some of the other things that are going on amongst the Bitcoin miners that I think are giving us some interesting messaging. Okay, so this is the weekly and daily cycle analysis for Bitcoin. On the intermediate term, we are rising, okay? We're looking at this as a higher low flag that's forming. Highest odds are that it would curl its way back to the upside. RS is firmly positive. That is critically important here. On the upside, 112.442 up to 117.255 are our nearest levels. And on the short term, look at this timing, okay? There's a low that's due right here, 6.2 to 6.16. Nice sell-off into it, right? And then we are now, we'll have to see where this actually closes, but acting well right now at this trough. So there is a low that is due here in Bitcoin. RS is now down, so this has to curl its way back to the upside in the short term to start to shift that overall bias back up. Now, I want to show you Mara, okay? Mara, I have not fully moved some of these arrows here, but you have the same sense, right? Mara is in a rising phase. Go to the short term. Look at that. Okay, I was looking for a little rally, a little pullback. It did that, right? Clear that off. Now we are trying to turn back up in Mara. Let's also see Riot. Riot. Look at how Riot is acting. In a rising phase on the weekly, and on the short term, this is acting exactly what we were looking for, right? Rally, sell off into the trough, and is now already turning back up and is already in a rising phase. So what does that say about BTC? In my eyes, it says we should be looking for this to, move up and move up through that old high in this next rising phase. And what do we see here? See a strong higher low that formed here and higher high. We'll be looking, this is acting funny, and we will be looking for a move to new swing highs in this next rising mode. Okay, so that's look there at BTC. The other one I wanted to highlight is GC, gold, because there was a question about that. On the weekly chart, okay, a trough that is due here, and it's right now holding sideways. In the short term, overall also holding sideways here. There's a low that is due here shortly, so we'll have to just watch to see this here in GC. But you can see right in the middle of range here. Really not a whole lot happening yet in GC. Okay, so just wanted to highlight that. Okay, Matt, and I'm going to hand this right back to you, sir.
Okay. Katie, there was one that came in on a longer time frame for Pfizer. Do you happen to have that one? I don't know.
Yeah, I have a weekly chart of Pfizer. Let's take a look here. Okay, if you can see the weekly chart of Pfizer, we have an average cycle length here of 36 bars. This was a negatively configured cycle prior, and we got a bounce, but only up into the very bottom of this resistance zone. Then we broke below the cycle low support and formed our minor cycle trough right on time at the 100% extension level of this move. Now we are back up into this minor resistance zone that was formed from this high and this recent low, and we would wait for this to begin to fail on the lower time frame charts for a move back down to retest this 100% extension area at about 20 and a half. If it wants to be weaker than that, 18 and a half is the 127.2% extension. But we haven't seen that happen yet. We do have a positive reversal scout right now. This would be important to watch the lower time frames. Unfortunately, I don't have a daily chart prepared for this one, but this timing period is 7/28 to 9/5, so a little bit later in the summer.
Okay, and then just another comment on Pfizer, Katie, if you have it. Do you have the just a monthly momentum that we could show?
Oh, sure. Let's see.
Even if we don't have the cycle analysis, we could at least show what the momentum is right
I
now.
think this is just a default. The momentum is negative.
Right. So if we're looking at, and what was the question, was longer term analysis, right? The longer term trend, the pattern structure, Katie, right, is negative, momentum is negative, and
Well,
there's another
momentum on
timing,
the
oh, a weekly,
on the weekly is
it's
positive.
positive,
So
right?
it turned up off of this minor cycle trough, but we're in this resistance zone. You can see that it's just kind of going sideways, and I, watch for this to begin to move back down.
Right. Okay. And if you're looking for some confirmation of a potential change, that momentum on the monthly is important to have that also shift. Otherwise, you could be seeing a curl up and then it's continued weakness in it. So if you might give up a little bit, or if you're considering position sizing, you consider small, and probably have some tighter stops when you're going counter trend. Do you both agree with that?
Yes, absolutely.
Okay.
Yep, absolutely.
All right. Does that cover everything that we are able to cover right now in the segment, or was there anything else?
I think that's about it for now, guys. Yeah.
Okay.
Yeah.
All right. Very good. Okay. I'll grab it back. Okay. We should see the special slide here. So currently what we have in terms of our market week special offer is the level 4 non-recurring 1-month trial. So that is for $99. It's 37% off. Regular price is $159. It's one-time use. Level 4 is our top tier membership. All of the charts, the indicators that you just saw the team utilize during that past segment are exactly what you would be able to import onto your own Thinkorswim platform. Now, I know that there are a number of you that don't have Thinkorswim based on geography. However, if you do have access to Thinkorswim, it is available through Schwab, and we're not selling this or pitching it for any other reason than it is our preferred platform right now for technical analysis, and allows us to share our charts. And has all the indicators that we use. You'd be able to obviously continue to trade through your own brokerage, but you could use that one for chart analysis and follow along with what we're doing and have that information more in real time. So that's really a main differentiator with level 4 is the fact that you get those charts, you get those indicators, and then also is our market conditions monitor, which has over 300 symbols that in live time. And I'm just going to show that for just for about 30 seconds because I'll do a demo on this after the regular show here concludes. And this is the market conditions monitor. It has multiple trader type outlook periods. So at level 4, you also get intraday. So there's near term, short term, intermediate, and that's in this trader view. And the purpose of the trader view is to help to give you a sense of what our momentum conditions based on multiple time frames are suggesting right now as a sum of the evidence. And what's very helpful too is the fact that you can sort on the trade setup condition and instantaneously be able to see based on the latest timestamp which ones are changing based on the degree of bullishness or bearishness. So that's very helpful if you're, number one, looking for a bias in a particular time frame. So whether that's intermediate, short-term, near-term, intraday, and even if you have your own methodology and analysis, you can cross-check that with our momentum trade setup condition, which is based on multiple time frames. You're not having to do mental calculation. It's automatically preparing that for you. And then you can obviously sort very quickly. So I can go right to intraday. And if you wanted to see what was leading or lagging, you can see that very easily. Even if you're not a day trader, it gives you a sense of where some of the action is at that moment. And then if you wanted to set alerts, you can, if you're level 4, you get our desktop app and you can set alerts based on what trade setup condition you're interested in being notified for. So it's very, very helpful. Again, it's impossible to monitor, hundreds or thousands of stocks and the conditions that they're at. And so with the market conditions monitor, you can do that and be notified as changes occur, whether you're already in a position and you're looking to, let's say, add to the position or lighten up a position, or put on a position. It can be helpful if you are a momentum trader. Even if you're not, this is a great way to get a sense of when things are shifting. So those are the two main aspects of level 4 that I wanted to cover as part of the benefits, which there are many, because you get everything in levels 3, 2, and 1. So again, I'm going to give a demo here after we conclude here shortly. And I will also step through some workflows using the MCM, our multiple time frame grids, our cyclo timing tracker, and give some sense of how you can sort of pull it all together using the level 4 tools. All right, we're going to move on into the next segment. Next segment here is going to be translating technical analysis into option strategy selection. So it's going to be Katie and myself. I'm going to step through the analysis on IWM, shorter term look, and then Katie is going to convert that information into ideas for option strategy selection. I'm just going to pull over my IWM grid. Just want to make sure everyone can see it. Katie or RV, just give me a thumbs up.
Yep.
All right, thank you. Appreciate it. Okay, so we're going to start with, so I'm doing a shorter term outlook for IWM, and I'm going to pull over some sticky notes here. A sticky note, because what I'm trying to do so that Katie can effectively put this information into option strategy or do option strategy trade planning is there's some core elements that I want to be able to point out. And the first one that I have to identify is what's my directional bias. So this is something that we do at Ask Slim that we focus a lot on, because at the end of the day, your directional bias should drive your position bias. This is especially true if you're a swing trader or a trend trader, momentum trader. And even if you're a counter trend trader or whatever your style is, it's important to understand what is the dominant directional bias. So that's a key focus for us. So if you have that dominant directional bias and you have a good handle on it, that should influence your position bias and also your position sizing. So what we look at, and I'm going to step through this one first, is the cycle configuration or cycle structure, and then the momentum to give us a sense of that directional bias or that trend, overall trend condition. And if you look at IWM, so I'm going to, actually what I'm going to do is I'm going to take a little bit bigger picture look first, because we use the multiple time frame analysis, and I just have the cycle brackets on here for now. And and I added in the minor, even though it's not a perfect fit because this is a 25 bar weekly cycle, it just helps me to read the money flow a little bit more and get a sense of these patterns. So I'm going to step back to the beginning of 2025, and you can see this minor cycle low here, and IWM rallied and then failed. And I'm going to take a quick look at where it failed as it tried to rally into. So it got up to about the 50%. You can see those tails tail prints right around 3 weeks in a row, and then it gave way. And you can see the reversal scout then roll over, go negative, and we went into a very, very sharp decline. But the key here is, where was that peak relative to that April low, and where are we now? So from an intermediate time frame perspective, there's some key messaging that has occurred. So we have a positive momentum condition, and then we also have, well, today, and so this week, and then a few weeks ago, which was the first indication of an important shift, we had a close above that 61.8. So we had a weekly close above that based on the minor cycle. So that suggested to me that the bulls were really trying to stake a claim in being the dominant, at least for a period of time here. And right now, I would call this intermediate time frame moderately bullish, given those conditions. If we could close above that 78.6, that would really be meaningful and likely suggest that there's a potential of a retest of that prior high. And I'm also going to do a draw from the main cycle peak all the way to the cycle low. And you can see that this 78 points, there's a confluence here between the minor and the dominant. And so if we've got a close above that 78.6, that would also then give us a close above that 61.8. And that would be a strong indication of the bulls really being in control at that time. That doesn't mean you go straight up. What that means is, like here, you get that close above, now all of a sudden it goes on your radar that when we do get a pullback, and especially when you go into those shorter duration time frames, as an X-ray vision to see when the buyers are coming back in to support that next potential leg higher. So this is I'm taking a deep dive into this process, because the first and most important step is, what's my directional bias? Because that's what's going to then drive your position bias. Do I want to be long? Do I want to be short? Do I want to be neutral? Do I want to be slightly bullish? It's very helpful and very important that you make that discovery. Okay, so now we're going to move on to the daily chart. And because this is going to be a shorter term outlook, as I mentioned, but I wanted to give you that big picture feel, because it's really important, again, from a directional bias, position bias perspective, that you understand that bigger picture, and you step back, even looking at a weekly chart, even sometimes a monthly chart, just so you can get a feel for the patterns or momentum, so that you know where all the different lines in the sand are. All right, so obviously here from that April low, there have been a series of higher lows that have formed. So this is stair-stepped into a positive pattern structure with an important cycle low that formed here. We have a ghosted cycle on here that is showing a little bit of influence, but this looks like is the dominant. We have an 18-bar dominant cycle that has become the primary one to focus on. But you could see that there was that little pullback yesterday. What's important is that when you overlay both of them, and this is another key element, and that is, when we talk about timing, why is cycle analysis very helpful, is because it gives you clues into the maturity of the move, in terms of the cycle phases, which also then can help with your position bias, and can also help with your position sizing, and to give you an idea of how much more room what might we have based on time, either to the upside, downside, or at least to consolidate bullishly, because this is overall currently bullish pattern. Okay, so we have that minor cycle low that likely, we have a low here that formed on our ghosted. We had a minor cycle low here, so we could get some choppy price action. We did break out today, but really what I'm looking for, regardless, is if we chop around a little bit, and based on the overall patterns, this rising support zone is likely to hold. Now, if we close below that 205, a daily close below 205, that's going to force me to reevaluate this shorter term analysis. But at the moment, you can also see that the reversal scout's turning up. So there's so many factors suggesting that the directional bias should be on the long side, or more bullish for sure than anything else, if you're a directional trader. And then the upside target zone, based on the fib draws that I've done, would point to about 214 to 219. And then you can see here that we have an intermediate 61.8 that is likely to be a magnet. So this is a confluence of fib areas that is going to be served likely as a magnet to this price action. And this would be the target zone that I'm looking for over the next 10 to 14 days. Now, where do I get that from? Well, I'm looking at the fact that we're likely in a new rising, we're still in a rising phase, made another low here. We bounced right off of the top of the slim ribbon, which is the 8 EMA. That's why we love to use these indicators. They're not for show. They provide key messaging. So we tested that 8 EMA yesterday, and then we gapped higher today. You can say it's based on the jobs report, but as we say, you know, most of the time, or the odds favor that the continuations are going to happen and the surprises in the dominant direction of the trend. And that's what we're seeing right now. Again, there's the target zone right here, reevaluation with daily close below 205, and then that 10 to 14 day outlook. If I'm looking for peaking phases as my guide, and you can start to see just based on the shape of the cycle brackets. And again, this is just an idealized concept. It doesn't mean that it has to peak, you know, here or has to peak here. It just helps to give you a sense, an extra edge in terms of time, potential maturity, and X-ray vision. Again, these are only odds. There are no certainties. So that's why I'm looking at about the next 10 to 14 days, because this peak in an idealized world based on a very bullish condition, you'd see a right-hand translation and a peak would happen somewhere around 617 to maybe 618, 619, somewhere around there. So that gives us that 10 to 14 day window. All right, that's the analysis in IWM. Katie, feel free to take it away.
Okay, I'm going to share my screen and let's take a look at Tasty Trade.
All right.
Okay, first let's load IWM in here. And then the first thing I look at is the IV rank, currently 16.2, which is quite low. That is going to affect our choice of strategy.
Okay.
When implied, it's moving around 15.9, 16.2, doesn't matter, still low. When implied volatility is low, then options prices are also relatively low. So if we choose a strategy where we are selling premium, then we're basically selling cheap options, and then we have to buy the options back even cheaper to close the trade. So if implied volatility increases in the interim, that can make it difficult to take profits. An example of that would be something like a short put spread, which is a bullish strategy where we sell an out of the money put and buy a further out of the money put to define our risk. So since our outlook period is 10 to 14 days, let's use this June monthly expiration cycle with 14 days to go.
Sounds good.
And if our reevaluation level is 205, let's go ahead and sell that put. Now, normally I'd want to go below that because if you hit your reevaluation level, you don't want to already be in the money on your trade. But anyway, I want to use this level just to demonstrate something. So to set up the put spread, I'm then going to go and buy a further out of the money put. Let's start with a $5 wide spread, which would have us buying the 200 put. So what you can see here is that you're only able to collect 73 cents on a $5 wide spread, and that is not going to be sufficient in terms of risk reward. I would want to be able to collect at least $1, if not more. Ideal would be around $1.60, $1.70. Now, if I were to go $10 wide or even more, then I'm starting to think of this as more of like a synthetic naked put. But again, I still want to collect at least $1. And I'm just barely able to do that here. So to me, this is not really a suitable strategy. You're getting a $1, but you're risking 9.
Katie, if I could just interject.
Yep,
Uh, on the 2 hour, I don't know if we can see both of our screens at one time. Probably
I'll stop
not.
my share and then you
Because
can show it.
this will just be a good a dialogue between the both of us as we think this out together, and showing real life price action and indicators and how we might be able to then fine tune a strategy. So what I'm seeing is that we broke out above a key level today. So we broke out above a cycle peak. Many times you have what was resistance becomes support. So we have a combination of information here. We have a price level, and then we also have the ribbons, which are starting to accelerate on the upside and fan out. So what I would see, Katie, is that if I was looking at a put spread, what if, and maybe it's better, maybe it's not, but this is a process you might go through. What if it was either the 210 or 209 is the starting point to sell the put?
Absolutely. Then that would work much better.
Okay, good.
What would your entry signal be for that? Would you wait for any kind of pullback and then just sell like an at the money put when you see momentum
It's a
starting
great
to go back
question.
up?
So what I would probably do is that today we had a signal. And so I'm going over to the 15-minute because this is a shorter term, near term kind of outlook. Let's say the next several days to a couple weeks, I'm watching for continuation signs. And my style is one where I don't ever enter a position the full size right away. I might look to build into the position, starting off with a quarter or a third, and then build out. So I would look to probably start a position today, and then I would watch the price action and look for some other continuation signs. So let's say it did pull back a little bit, and then we got another indication of a continuation on the upside. Then I might look to start to build out that position further. Is that helpful?
Yeah, it is. Let me go back to Tasty real quick.
And when we talk about, and I'll stop sharing here. When we talk about entry, you start with the directional bias. And so I walked myself through weekly, daily, and even looking at the 2-hour. All of these are suggesting a more bullish directional bias. That doesn't mean you can't have a pullback. But then what you do is you go to shorter duration timeframes to help, and I call it, it's like an X-ray vision around your entries. And that's what you can use to support, because Katie asked the question, so what's the signal? And so what's helpful for me is using the slim ribbon PO, is using the SMI to give me a sense in that near term that something is continuing in that more dominant direction that I'm looking for. All right, go ahead, Katie.
Okay, so here's Tasty Trade, and you're essentially then 210 is very close to being at the money.
Okay.
So you're essentially selling a short put spread at the money. And depending on how wide you would want to go, if you did, $5 wide, now
Okay.
you're up to 160, which is acceptable. That is, basically a third the width of the strikes. And then, if you're doing like a $10 wide, you're getting over $200 for that.
Mm-hmm.
So that would be a good risk reward ratio. Here would be this is the risk graph there. So if you got your move up, depending, this is
Mm-hmm.
a 14-day expiration cycle. So if you are in between, like let's say you got that move up tomorrow, you
Mm-hmm.
are still going to have a lot of extrinsic value left in here that's not going to collapse. So you would not be able to take the profits that you necessarily want to take.
About how much profit would there be? Let's just
If
say
this
tomorrow on Monday it exploded to 215.
215 essentially on Monday, I would say would give you about $50.
Okay. So that what
And you can see
percentage?
that on this screen right here, the profit loss theoretical.
Mm-hmm.
Now this assumes that all of the other things remain
Right.
steady, like implied volatility and whatnot, which does not happen. But that's the reason that if you had this move tomorrow, you would not
Mm-hmm.
be able to get your full profit. That would,
Sure.
even though you are in the max profit zone if you were at expiration, but there's still going to be too much extrinsic
So
value left in that.
it's about a third-ish of the max profit, right? So if my
Right.
goal is to get about 50% or 60% of the max profit, then and I'm targeting, that looking at when I was looking at the peaking phase, somewhere around probably more like the 13th to the 17th, which should probably get us back closer to that 50, 60, 70% premium collection, I would assume.
Right. And so on Tasty, it's interesting because if you want to go and move your dates out here, so here's June 13th.
Okay.
And if it was on June 13th, you would be much closer. You'd
Oh,
be at
wow.
about $120. And
Right.
that's because of the acceleration in the theta decay over the
Mhm.
course of just that 1 week. Because this is not, this only has 14 days left in these options, even just right now.
Got it. Okay, I think that was very helpful to see the difference between where you set that initial put that you're going to sell, right?
Right. And so it does matter when you get your move.
Mm-hmm.
And just in terms of your ability to take profits. Now, of course, you would still be able to take a profit. It just might not be the profit
Right.
that you want.
Mm-hmm.
Okay, so now let's go and take a look at a long premium bullish strategy that is more appropriate for a low IV environment, and that is a call debit spread. So this involves buying an in the money call and then selling an out of the money call to reduce our cost basis. So let's look at again right around a $5 wide just to start. And let's go and buy the 210 and then let's go and sell the 215. Now, what we're looking for is an approximate 1-to-1 risk reward ratio. So I look over here where we have max profit and max loss numbers, and we want these numbers to be equal or close to it to get that 1-to-1 risk reward. So we can just use these buttons right here to move these strikes around, and it's going to be the 208, 213, 209, 214 that gives us closest to that 1-to-1. Now, of course, you can make the spread as wide as you want. The principle is the same. By going wider, you increase your profit potential as well as your max loss. But the thing about these debit spreads are that they do have a capped profit potential. So again, the same sort of principle applies. If you got this move tomorrow, even though at expiration this would be at max profit, there's still extrinsic value left in here, so you would not be able to collect the full amount of profit. If this move happened tomorrow, if it happened closer to expiration, you would be in much better shape. And of course, a spike in implied volatility will make these options more expensive. And so then you could buy this back. It will be easier to take profits.
So, Katie, let's just talk about this strategy, these two
Mhm.
strategies for a second, and why and who they might be better suited for. And I would think it would be for someone who maybe isn't at their desk all the time. Maybe they want to have more freedom. They want to set alerts uh, because this is going to give you a little bit more flexibility. You have a hedge situation. Also, if someone maybe is newer to options trading, because if you when you're just doing long calls and long puts, right? The and you're dealing with the decay, the time decay. May have a profit for 1 hour and then it's gone the next hour. So this is going to
That
help.
could happen.
Right. And you've seen it plenty of times, especially when you're dealing with shorter duration expirations. So any other comments around that, like in terms of who these are more suitable for? Does that seem to resonate with you too?
Yeah, I mean these sorts of positions, depending on your risk reward parameters, but generally if you're making this as wide as suits your account type, then you are essentially, especially with a duration of 14 days, you're essentially saying, okay, I'm willing to risk one to make one, basically. And so this is kind of, just a set it and forget it sort of thing. I mean, obviously you can close earlier, but with these debit spreads, they do come in quicker. So if you moved down quickly to 205, again, if that was closer to expiration, then you would very quickly show this max loss. If it happened on Monday, then you would be able to get out with less of a capital loss. But in general, I would recommend that when you place these trades, that you're basically placing your risk management right off the bat.
Sure, makes sense. Now, just to talk about ways that you can utilize the option strategy given the context of the technical analysis, Katie, if we're looking at something that is more bullish, and if you have a little bit more sophistication in managing the position based on the analysis, let's say Monday, Tuesday, Wednesday next week, we did get that pullback, you would be able to collect, and if you bought back your call that you sold, right? You that would leave you then with your long call if you felt that that was the dominant direction, and then that would open up the door to a little more or a lot more aggressive profit opportunity. It's a more aggressive approach, but it can turn from a hedge strategy into into a not a direct stock replacement, but more of an aggressive opportunity for profitability.
Right. Now, would you consider doing that if you pulled back below the level of your long call?
No, it would all be based on the price action in terms of if you saw, let's say, it pull into the ribbons and then it went back positive and it was reflecting that there was another leg higher was likely underway, you could buy that back and probably at a profit, right?
Yeah, because this is short, and if you're
Yeah,
pulling back, it would show a profit. So you buy that
because
part back
it's
and then
very out
leave
of the
this on.
money, right? Exactly.
Mm-hmm.
You could leave that one on, and then you have to be you can't then just tune this one out though. This isn't a set it and forget it situation. This then
Right.
becomes, okay, I have to have a tight stop because if it doesn't break out, you may accelerate the loss situation because you no longer have that sold call up
Right.
above.
You do not
So,
have a max loss.
right. Yeah. So it's just another way to play the technical analysis if you are more active with and you wanted to start with a hedge situation, watch it develop a little bit, and then make some other decisions as it goes.
Right. And then the last one that I wanted to talk about was a stock replacement strategy like the Zebra, which stands for zero extrinsic back ratio. Sounds
Cool.
complicated, but it just simply involves buying two in the money calls. And to set it up, we start right around that 70 delta. So that would be right at the 207 mark. And we would increase that by 2. And then what we do is we look right down here at the extrinsic value that is in those two long calls. And we try to eliminate that by selling one call. And the closest one here would be, I have extrinsic value loaded in this column. So you can see that the closest amount would be this one right here, the 211. So if I were to sell one of those calls, then this would be the Zebra. So you try to get your extrinsic value as close to 0 as possible. And it's a back ratio because it's basically a 2-to-1 ratio of long to short calls. And what happens with this is you can see that you end up with close to, in this case, close to 90 deltas. And so you are basically trying to capitalize on this move by a 1-to-1 ratio, almost as if you were buying stock. Now, if you were to buy 100 shares of IWM, then it would be a little bit more because we only have 87 delta, whereas 100 shares would have 100 delta. But you have no profit, you have no cap to your profit potential here. It is unlimited. If suddenly IWM, shot up to 300, you would make, $9,000 here, just as if you had shares of IWM. But the benefit of this is that you're only spending $825 as a debit to place this trade, and that is also your max loss. So this is a good strategy for those who want unlimited profit potential.
Katie,
Are you
yeah, that is a very, very interesting strategy as well. I don't think those get enough credit in terms of what you can do to set yourself up based on your analysis. and limit. This one still has defined risk,
It is
correct?
defined risk, yes.
Yeah. So this was interesting. Those were really good strategies. Thank you, Katie, for sharing those and going into the detail that you did. I
Sure,
don't know
no
if there's
problem.
anyone
I will.
in the audience that has any specific questions on those that Katie might be able to answer. If not, you can reach Katie directly if you're a premium member on Discord, or if you're a prospective member, you can write to her at katie@askslim.com. Okay, so that's pretty much going to wrap up the live show today. Katie, RV, was there anything else in the Q&A or chat that caught your attention that we wanted to touch on?
Claude asked a question about, I had said that if the implied volatility goes up and the options become more expensive, it's easier to take profits. That would be on the long premium strategies. And the reason for that is because every strategy, even though it might be a spread that has two positions, one of those is the driver. So in a short premium strategy, the short put is the driver, and therefore you want that to become less expensive. On the long premium strategies, your long options are the driver, and those are usually closer to at the money. And so you want them to become more expensive, and that change in the Vega will affect the closer to the money options faster than it will the further out of the money options. And that's the reason why you would be able to take profits faster if you get a bump in implied volatility.
Very good. Excellent. Okay. Well, we thank everyone for joining us today. For those of you that do want to continue and want to hear more about level 4, or want to see me walk through some workflow examples of using the level 4 tools, I'm going to concentrate on the MCM, and we'll take questions. We will look at a few other symbols. So if you do have some other symbols you have an interest in, feel free to put them into the Q&A. Otherwise, the regular ASLM Live session has concluded. And again, thanks again for joining us. Thanks, Katie and Arvi, for our awesome team here and your expertise in the world of technical analysis and trading.
Awesome.
All right. Thanks
guys.
everybody, and have a great weekend.
All right. Take care.
Bye-bye.
We'll talk.
Thank you.
Okay. So we're going to jump in. We're going to look at level 4. And I had talked about in the demo in terms of IWM, what we want to have when you're building a strong foundation for stacking the trade setup odds in your favor. And we want to identify and learn about, with Ask Slim, you can identify and you can learn about the core elements of technical analysis. And you see us convert this technical analysis, our technical evidence, into trade planning decision points. That's really the key, is how do you go from technical analysis, and then how do you move into your trade planning process. And our team here at Ask Slim is very, very focused on that process. And I wanted to be able to bring some of that to you today in terms of how I go about using the Ask Slim tools and showing some examples of doing that. So we're focusing on style, your preferred outlook periods. That is fundamental. You really need to know what are those preferred outlook periods. Now, sometimes you don't know what your preferred outlook period is for a setup until you've done your analysis. And if you're someone who has a wider, let's call it arsenal of tools, or you have the ability to pay more attention to what's happening in the markets, then you can have this flexibility where something in your analysis suggests to you, okay, I'm going to do a day trade, or I'm going to do a near-term trade, or I might do a combination of near-term, long-term, and that door is open for you. However, there's usually a sweet spot that you prefer to be active in, and it's as time goes, and you'll find that. But you shouldn't exclude anything if you really have an interest in being a market participant, because the market gives you so many opportunities in different timeframes. But it is important to know which ones really suit your style. And as we talked about bias, so your directional bias, you need to have a methodology, some type of process that helps you determine what you would consider to be the bias. So am I long? Am I short? Is this neutral? That's what the analysis is telling you, because that then is going to drive your position bias, your positions helping with your position sizing. And then we have levels. Your analysis should generate several outputs around levels in terms of targets, reevaluation, risk areas. Then we have timing. So that's why cycle analysis we feel is so important to a technical analysis and trade planning processes, because it gives you a sense of pattern phasing and maturity. How much farther does this move have to go in terms of the time? Or is a new move, a new money flow pattern, a new move, a new impulse, wave, whatever you want to call it, is that starting again? So that's what cycle analysis can help with. And then obviously you have to have a way to identify when you have suggested signals that tell you the trade is a go. This is critical, because what happens when you have signals that suggest the trade is a go is you don't hesitate. You don't have any reservations. You've identified plenty times beforehand, and you have a process for yourself that says, okay, if this happens, this trade's a go, whether it's a quarter size position, whether it's half, whether it's 3/4, however you set yourself up. You want to know that there's certain signals that happen that tell you your trade is a go, but it's not just the entry. It's also the adding to a position. It's also the taking some off. It's also the exit of the position. So you want to have a lot of that defined. Now, there's no endpoint to your learning journey. Slim's been doing this for over 50 years. Our team here have been, doing this. I've been doing this for 25 years, and you are constantly having to evolve and enhance your process, because that's what keeps you in the game. It's no different than being a competitive athlete. Once you think you know it all, you're going to come up against another team of athletes that are just as well trained as you, and they want to win. And that's what we're competing against every day, are other traders. And our job is to figure out how we can maintain our own edges. Okay, so that's the baseline set of information. This is what we teach here at Ask Slim, and it's not just teaching, it's also we show you the application aspect of this process. All right, so we're going to jump in now, and we're going to look at walking through some workflows using the key level 4 tools. And I'm going to see if there's any symbols in here that we can look at as well. I know that there was, I think QQQ came up, and then there was HUT, and not sure if there was any others. I'm just looking in my Q&A and chat here. I don't think so. So if you do have other symbols, go ahead and put them in. Go ahead and put them in there. All right. So let's look at the MCM. I'm going to walk you through a process that I stepped myself through. And again, a lot of it depends on your outlook period. So let's just start with, let's just say we're looking at the near term. So the near term for us is the next 1 to 5 sessions or so. Less than a week, but it's not a day trade. And I'm going to look at this hood. And why am I looking at hood? Well, it came up as very bullish. The last timestamp on here was 11:15 today. This is Central Standard Time. That's why it's showing my clock, and that was at 11:15. All 6 of our time frames with our 2 momentum indicators. So we use our reversal scout. You hear us talk about these 2 indicators all the time. Reversal scout, slim ribbon, and they all went back to positive alignment. All right, so what I'm going to do next is I'm going to pull over this multiple time frame grid. And I just want to confirm in the audience that you can see my grid. If you could just give me a raise of, someone just raise their hand, give me a thumbs up that you can see the hood. All right, good. Thank you, Claude. All right, so we're going to look here at hood, which is Robinhood. And I know Arvi has done work on this one, and he would probably have some interesting insights as well. But let's just step through again the first step is directional bias. And this one's not too hard to get a feel for when it is making, new multi-month or multi-year highs. And what we were going to focus on is our near-term, what could a near-term outlook be in terms of opportunities? And what I want to do is, so I have the directional bias. It's very, very clear. And next I'm going to look at some levels, because what I'm after are these core elements that help me then execute my trade setup. And so the type of setup I'm looking for is a directional swing inside of a dominant trend and momentum condition. So what I'm eyeballing right now are these swing lows and swing highs so that I can get a sense of where we are in the move without cycle analysis at the moment. So I have a nice swing low here. We have a swing high, another swing low, right into that slim ribbon. So there's always additional like teaching insights. So we do teaching plus tactical implementation. And you hear Arvi talk about it all the time, the importance of understanding where the price action is within the slim ribbon. And you can see here, once you get a acceleration of a move where we start to trend off very often, again, it's all about odds. This is not, these are not certainties. So there are going to be times where things don't work out, but you know what? That's okay. I expect that. And it's no different than, and I've said this before, it's, you get a mosquito bite. Okay, you can handle that. You move on. You have to pay a toll on the highway. No one likes to throw money out the window. But at the end of the day, if I want to play the game, I want to take a drive somewhere that's new out of my vicinity here, then I'm gonna have to probably pay a toll. So it's no different. If you want to be a trader, you're paying a toll is taking a loss. Now, there's different types of losses. There's mosquito bites, there's dog bites, there's shark bites. You don't want many dog bites, and you absolutely do not want a shark bite. You get a shark bite, that means that the game might be over. A shark bite means that your position sizing is way out of whack. And yes, the reward opportunity is unbelievable, but also the devastation could be huge in terms of taking you out of something that you really enjoy doing or have developed some type of consistent income opportunity. Okay, so that's the sort of teaching. Now we get back into tacticals here. We have a swing low, swing high, swing low. I'm looking for that multi-prong approach of the low, the high, the low, and then I get some targets on the upside. And the first important target when something's trending is going to be in between that 61.8 to the 78.6. That's typically my initial, and then we go from a secondary, which goes from the 78.6 to the 100%, and then the tertiary is usually when we get into that 100%. But this is only off of one draw, and you can see the one draw had some impact here as it started to chop sideways and then really go sideways once we got into the 100%, which means that Hood had to absorb the shorter term traders selling. That's what's happening near term, intraday. You're getting up into a key fib area and there's some selling that occurs, and then it chop. And now what I'm going to do though is we're going to go back in time for a second, and what could we have done there to help ourselves is, well, you could use the MCM and you could set notifications, because it probably on the near term went to like slightly bullish or neutral. And then in the intraday, it might have gone neutral or slightly bearish even when we went into that choppy period. And you could set your MCM to slightly bullish, bullish, and very bearish. I'm sorry, slightly bullish, bullish, very bullish. And then that would help with giving you an opportunity to have Hood on your radar without having to follow it every moment, knowing that the market conditions monitor is doing that. Then you would get a signal or a notification on your desktop saying that something's changed, and where that would happen. Now I'm going to go into the 2 hour here, and you would probably get, a signal here, because you can see that it went back positive both in the slim ribbon and in the reversal scout. This might be a place where either you would enter or re-enter, and then you get a pullback. Maybe it takes you out because you have a risk rule that said if we got below a certain point, I'm out. If it was below the low, we didn't do that. But even if it took you out, that doesn't mean you throw Hood away, because markets don't always do what you want when you want it. It's going to do what it wants when the market feels like it. It's like an ocean waving, and you're the surfer. So if you think you're going to control the wave, the ocean was likely to crush you. And we're not bigger than the ocean waves. As a surfer, we want to ride them. And sometimes we fall off and we got to get back up. So you might have fallen off here, and then the new signal comes. And if you said, forget about it, I'm done with Hood because I took a loss and I can't stand this symbol. It knocks me out. It got choppy for 2 weeks. I thought I was going to take off. And then all of a sudden it goes on the move that you've been waiting for 2-3 weeks. That can happen. So this would be what's great about the MCM is it doesn't have any emotion tied to it. It's just going to continue to alert you that the indicators that you had set in place, the combination of bullish trade setup conditions that you're looking for, are coming back in. And until you stop it and tell the system you don't want it, it's going to be, I think, a very positive reminder of what you're looking for. And it takes the emotion out of it and brings you back to, okay, yes, I'm looking at a very positive overall trend here. And yes, I got frustrated as it went sideways for 10 days, but it looks like another breakout's coming, and off to the races we go. So coming back over to the daily chart, I'm going to look at another swing. Few swings here. And then what I'm going to do is look for a confluence of areas. So for me, this is saying that Hood now, based on price, is likely reaching an area, the first area of exhaustion. And so somewhere in between 78 to around 81, I would anticipate that we would get a pullback. Maybe that pullback. See, now if you're a counter trend trader and you hear me say that, you think, okay, that means I can go short. If you are a extremely disciplined, near-term, active, maybe intraday trader, and you have no problem with taking a loss, meaning if it goes against you, then yes. If you're someone who doesn't do well with taking losses or making decisions, then being counter trend is, I'm going to call it I don't like to use emotional charged words, but is a dangerous game for your capital. Why is that? Because as trends continue, they don't give you, there's no inherent situation when it comes to the price action or the time. As you can tell, when you go with the trend, you have both time, right? So here's our axis down here, and price. So we have time, and then we have price on your side. So if I was looking to get short because I felt like this was a good peak, maybe it gave me a couple points on the downside, but it gave me almost a 80% move on the upside here. So I see this as a potential little exhaustion point, but really it wouldn't be up until about 84 where I think this could peak from a short term, maybe an intermediate time frame, and then you get a more I would say a normal magnitude kind of move. So when we say a more of a normalized move, that's your typical pullback that is 38.2 to 50% of the prior rally, right? And so this one here, if we look at this pullback, this pullback here, so this was a swing low, a minor swing low. This got us to about the 50%. I know there's a lot of fib levels here. It's sort of hard to see. But so that's why understanding the time frame of the move that you're doing your draws on is so important. This pullback made sense. It was 50%, but look what happened. If you left for a day and said, you know what, I'm going to just hold my short. Yeah, it gave you a little move. It gave you, let's just say you were lucky enough to almost call that little minor peak. Yeah, it gave you a 2-3 point move, but then it shot up, right? And so that what was a profit has turned into a loss. The more consistent with the overall structure of the move, the trend, it would be to look for long opportunities. But coming back to a more idealized pullback, so I'm going to clean these up now. And a lot of times too, these pullbacks, when you have very strong trending symbols, is they come into the slim ribbon, watch for them inside the slim ribbon, and then they take off again. Inside the slim ribbon, this one got down to the third band and exploded higher. So that's the slim ribbon that Slim invented, is probably, the most fundamental indicator that we have, and one of extreme value for those reasons. All right, so now let's look at that potential magnitude of a move. Now I actually have to put the draw back. And you can see our option bias indicator. I know I'm jumping around, but I'm trying to point out a lot of things that I'm seeing as my eyes catch it. This little indication here is our option bias indicator, and it has a volatility component built into it, and it's showing what we call a P1. So it's an orange 1 or gold 1 color. It's a positive indication, but it's also suggesting that we're getting into an extreme overall condition on the upside with hood. So again, it's interesting when those happen in combination with reaching certain timeframes or price levels. So again, we just reached this 100%. So we're getting into that. So if I had a position on that I had been holding, this is where I start to look at watching for, opportunities to maybe take some off. Especially if I've had it for a while and I'm not looking to give it up. But there's been nothing in this 2 hour that really is warning me yet of anything changing. We had this pullback that could have whipsawed some people out, but it's, the buyers came right back in. All right, so I'm going to do this draw here. And what I want to show, I'm going to get rid of this one. And I'm going to show what a more normalized magnitude of a move on the downside could look like. So let's assume that, this was some type of low, probably a minor low of some sort on some time frame in terms of the cycle analysis. And then we had another one right here, but I'm going to go from this one. This one looks more meaningful to me, and it probably matches up with something on the indexes as well. So either the 78.6, then we might get another pullback to the 50%. And what usually happens is these breakout areas, you have a consolidation, right? We have a consolidation here. We rally, maybe we get up to 85, then we pull back into that. Or we get up to 92, somewhere close to that. And then we pull back into these areas. So this is usually the pain point. This is where shorts really start to suffer, is when things just drag higher and push way beyond what you would normally think is possible. We've all been there, and you learn hard lessons so that you don't have to do it again in the future. And that's another thing that you're going to gain from being an Ask Slim member, really at any level, but particularly at level 4, is these additional insights that we share as we talk about things in these live events or in office hours, or if you even write to Slim at level 4 and ask him about some psychological aspects of trading. He's done so many videos on those. But that's the area I'd be looking forward to get a little bit more of a meaningful pullback. Now, if we broke below this low here, and that would tell me that the minor pattern structures have shifted negative, and then there's a short-term, a directional short-term downside swing short that would be available. Right now, it's all about your setup. You have to wait for the combination of information to suggest to you that your setup is in motion, right? And if you're a swing trader and you're a directional swing trader, there's absolutely nothing here from a trend and momentum perspective that says to me, I go short right now. So even if it dropped to 20 points tomorrow, you're doing your job. You're being disciplined to your approach. If you have some other methodology that tells you that you're a peak tracker, you're a top track, you're topping, you track tops that form, and it tells you that this is this is an important setup forming for you, then you make that decision based on that type of edge and type of analysis. What we're showing you here is as our default methodology is all about, again, directional bias and using pattern structures and using momentum to make that decision. Okay, so that's how you can look at the charts, right? This is our sort of standardized approach. And then also using the MCM. So if I wanted right now, Hood is not a great example of looking at a re-entry opportunity with the MCM, given the fact that every single indicator is basically positive. But I could put on there, if I went neutral, let's say in the near term, or neutral in the intraday, and I wanted to be notified, I could do that. Let's just say I want to be notified if we got into a neutral situation, even, slightly bearish. Because if I'm looking at now, let's say my outlook is broadening out, and I want to look at an intermediate opportunity, or a little bit bigger, maybe a 1 to 3 week opportunity in Hood. I could set this up, then I can watch it and see how it acts when it gets into the neutral or slightly bearish conditions, and then for another leg higher. So that's something you could do in these different time frames. So if I went to intraday, I could do the same thing, and then I can search for a Hood, and then I could set myself up with a neutral to slightly bearish alert, and then I could follow it if I wanted to. So there's a couple questions I'm just going to answer that are not technical analysis related. They are more about this presentation itself. Yes, there's going to be a link for this recording. It'll be shared later today, most likely, and it'll be posted up on YouTube, and also posted in the membership dashboards. Another question was about these little sticky notes that I used. Roger had the question that sticky note that I was showing, this one here, this is just a tool that is available in your Microsoft. If you use Microsoft, Windows 11 or whatever, 10, 11, 12, these little sticky notes here are available. So there's little handy pieces to have as you have ideas, or if you just want to have instant access to some kind of note taking. There's so many different ways to do it, but that's a good one. Okay, all right, we're going to move on. And we're going to now look at a couple of these other, let's see if I have HUT, H-U-T, in here. No, that one's not in there. So what I'm going to do is we're going to stay inside of the MCM, and we're going to look at something that's more neutral. Oh, wow. Okay. So right at the moment, we have the SPY that is neutral, QQQ that is neutral, IWM that is slightly bearish. So intraday, that is very possible, right? And so what's always happening is you have within each time frame, you have conditions. And if you're looking at the multiple time frames, those shorter duration time frames are very helpful, because they can assist with your decisions around entries. So for example, let's look at QQQ. I know that there was some people looking at QQQ. I'm just going to stop here for a second. If you look at Hood, and if you're a near-term trader, there was a couple really important signals. And as you go in these patterns, they go higher and higher, or they go lower and lower, and you're like, I just can't imagine myself trading them because of what's happening. There's a couple things you can do. One is you can reduce your position sizing. You can tighten your stops. That can take some of the pressure off. But these things can run, and they can run for a lot longer than you might be able to logically think makes sense. And in terms of signals, here's the slim ribbon PO on the 2-hour fired positive, another fire positive. And then on the 15-minute, today, this is really cool to see how this works. So you have the slim ribbon. We also have the reversal scout. It gaps up in the morning. It pulls all the way back, actually gives up ground relative to where it opened. But the slim ribbon and the reversal scout stayed positive this whole time. And you get the slim ribbon PO fire positive. And this is a great move. And maybe you take some profit now if you're an intraday trader, because it gave you one heck of a move. What I would do is, traders are always looking at prior highs, right? And as places where things can even accelerate more, or they start to fail. But if I do a draw here, it's getting up near that 78.6. So this would be an area for me, which is also in alignment with that prior high, likely take some off the table. Again, I'm not giving trading advice. I'm talking through strategic tactical approaches. And if it runs, then I hold on to it. With our day trader service, we have another set of tools that at a shorter duration time frame that help also with exit. So whenever you're looking at shorter duration time frames, they can help with your exit strategies because you can set your indicators obviously to when those shift, they can tell you that maybe a move has exhausted in a specific time frame. And whether it exactly does or doesn't really matter. The key is that you have some way of executing when certain things happen, because it's like, well, how would I know when to exit this if I want to maximize my winner, right? I want to let my winner run. Well, I can tell you one thing, you're never going to be perfect. Now you're constantly striving for excellence and looking at ways to improve your edge and your entries, your exit, all of that. But you have to give yourself some space on being perfect. It's not going to happen. Sometimes you're going to nail the peak. Sometimes you won't. You'll exit here and it runs to the 100%. So the best thing to do is always just be disciplined and maximize your overall approach. And your overall approach should then give you ultimately the consistent returns that you're looking for. So as an example here, and I don't have my shorter duration time frame on here, but what I will do is I'm going to pull up the MCM to help with this, because this is a really important topic, which is the exit. And the 15 minutes going to be too slow for me if I'm an intraday trader or a near-term trader, and I really want to not give back a lot of my gains as you get into these potential exhaustion areas. So the first thing you can do is look at these key levels, key highs, and then you can look at shorter duration timeframes with these indicators like a 8-minute, 5-minute, 3-minute. And so I'm going to use the 3-minute here. And I'm going to go back to Hood. And what I'm going to do is I already have this neutral, slightly bearish, right? But that's not going to be good enough for me. What I want to do is be notified even when it goes just to bullish. So when it goes to bullish, that means that the 3-minute on either the slim ribbon or the reversal scout has likely gone negative. And that'll tell me that there's something probably changing. So I'm going to set that alert. And if that happens while we're moving on to the next symbol, that'll be interesting for us to look at. So I have set that. I've got neutral and I've got slightly bearish. And I believe I have my desktop app pulled up here. Yeah, I have it. My alerts are set. Okay. So that's how I combine, how you can combine and how you use these as a workflow as you go from your process of looking at the charts to do your analysis to then getting to the point where you're determining your directional bias. We have so many tools that can help with directional bias, the MCM being one of them. I'll show you a couple others here in just a second. But again, setting these notifications on positions that you are actively managing can be very helpful. And me going to just to bullish is going to be huge benefit, because that'll tell me that something in the 3-minute, one of those key indicators has gone negative. And that could mean that we're reaching an exhaustion point, at least potentially intraday. Okay, I hope that's helpful to give you a sense of a process that you can use when you're looking at multiple time frames, when you're looking at how to use these indicators to assist with, most importantly, your directional bias. That's what these indicators are doing here on our charts. I'm going to go to the QQQ, and we're going to look at this one. So the indicators, we have our momentum indicators. We talk about those all the time. Slim ribbon, reversal scout, those are our primary ones. Then we also have, let's call our slim ribbon PO as as a continuation indicator. It helps to very quickly, you can get a sense of what the momentum condition is, because that momentum condition is, when it's green, it's positive. When it's red, it's negative, right? And then when it's neutral, it's either gray, blue, or purple. So that's very easy to be able to distinguish for yourself. So slim ribbon PO, dominant condition, positive. You can see that it pulled back here into what it's measuring, which is an oversold condition. And then as long as the selling is not at a magnitude where it shifts the overall dominant condition, what it watches for is when it comes out of the oversold condition and then back into a likely continuation of the dominant momentum. Because a lot of people say, well, geez, these indicators are lagging. Well, this is absolutely not a lagging indicator. And as you go to shorter duration timeframes, you can tune your momentum indicators so they're going to be less lagging than a 2-hour. But the purpose of the momentum indicator is to let you know that there's a likely a continuation or there is a move underway. And you can see that slim ribbon PO here fired positive, and that was a good signal for another move to the upside. So there was a request for analysis on QQQ. Obviously the pattern structure here is positive short-term, positive in the intermediate. Here is the prior intermediate high up here, and we're well above that 78.6. So from a short-term perspective, we're getting extended, but there's nothing here yet that says this pattern has shifted and has gone even neutral. For that to happen, or for this to become more negative, the first thing I'd watch for would be the reversal scout and the slim ribbon. Reversal scout to go negative, slim ribbon to go neutral. That would tell you that you have like a minor peak situation likely happening. Right now, we don't have that. So that would be the first warning. And then on the daily chart, it would be more looking for breaks and closes below key levels. One of those being this one here. So if I got to close below this minor swing low here around 512, let's say a daily close below that, that would be negative. That might tell me that we have a more important peak that is occurring on the daily chart. And then what you're doing is looking for seeing how the price action is and setups maybe on the downside for in the short term. But overall, the intermediate's probably going to stay positive unless you start getting more meaningful breaks. So this would be a more meaningful break. It might be a warning. But since the low, so this was also the intermediate low, there's a long way to go to damage the current positive overall pattern structure. And yes, if we broke below this low, that would be a warning. But this pattern structure, you'd really have to see a close below 61.8 to neutralize this larger pattern structure. If we're talking about minor patterns and short-term patterns, no, those would happen earlier, which are warnings for the bigger one. But the bigger one, it takes a lot to shift those boats and to turn those sails a different way. I mean, you can see the slope of this momentum indicator right now is very powerful. So, I mean, bottom line, QQQ, positive. I gave the areas here. We get a close below this level. That would suggest that we have most likely a minor peak, daily peak situation. The first warning is going to be reversal scouts plus slim ribbon. And what I would do is use the market conditions monitor. Go to near term, because near term is monitoring the shorter conditions, right? The near term conditions, short term conditions. You have daily 2-hour, 15-minute, and I'm going to change this to neutral and slightly bearish. So those would be my warnings. And I'm going to also do it on IWM. That would tell me something's changing. Okay, so that's how you can use this tool to help you not only with finding potential setups, helping with entries and exits. Also, it can help you with notifying you if there's key changes in the indexes as well when you go to these different time frames to look at that. All right, that was a look at QQQ. Someone asked about HUT. I'll just take a quick look at that with the multiple time frame grid here. I don't have it in the MCM, and that's not one of our core focus list symbols. So I'll just do a 2-minute review of it. HUT. That's a big breakout today, obviously. You know, you can see the prior swing high here, and as it was coming up near those prior highs, some selling came right back to this near that slim ribbon, the lower band of it. And this, you know, this is what's really cool is that people don't, especially if you're newer to Ask Slim or newer to technical analysis or trading, is that once you find really good logic, real meaning, you know, tools, indicators, studies, things that help you make decisions, right? Conditional thinking, then they can be applied across multiple symbols, indexes, markets, so on and so forth. And so you can see the slim ribbon PO, you know, gave a signal, it must have been today, of a continuation. And, you know, it opened around 1680 and it's gone up 2 points already. So that's another thing where, oh, I missed it. You know, I really wanted to get in yesterday. No, there was a good, you know, there's a good move here. And how do you know that there's still some room to go or not? Well, if you break out above here, then like, what's the next target? What are the traders looking at? So that's when I come over here and I do a draw. And this is a very powerful trend. So, you know, 19-ish, 20 and a half, those are where traders that got in around this area, or some larger position holders who took the risk at coming in at these lows, are probably waiting for these areas to take some off. And right now, they're not willing to do that unless something really, really changed, is what this would tell me. Other indicators on here, we have the MCI, we have the OBI. You know, these are all positive as well. So right now, this is a positive overall stock in terms of the patterns and momentum, and you know, it has room to go on the upside. Doesn't mean it can't pull back. Doesn't mean it can't all of a sudden on Monday reverse course. But that's not the point. The point is to try to define your odds for yourself, or define a methodology that gives you odds, and then you, over a large sample size of trades and setups, you play that, and that's the game that you play. And until you have enough of a scorecard to tell you that it's not working, then you keep going with it. But you're always looking to fine tune things as you go. So that's what I'm seeing here as a potential upside in HUT. All right, so I'm just going to show a couple other of our tools here. We went through that. I think the MCM, I can't recommend strongly enough to use that more as a tool at your disposal. If you're level 4, even if you're level 3, you might not get all of the features and functionality, but it is still a really helpful tool from the near term, short term, intermediate time frame perspective. But maximize that tool if you are level 4 for sure. Okay, so now we're going to look at, we're going to go into the dashboard for level 4 members. And I'm just going to go to a couple of these other, there's so much in here. And I've done a number of tours and videos of level 4. But let's look at the cycle low timing tracker, and then we're going to look at the ranking system. I talked about what's important as a trader is to be able to define your directional bias, your timing. This is all about timing. So Katie goes through on a daily basis and looks at 3 phases of timing. And I'm going to go back and we're going to look at, I have the SPX here. Let me find my SPX. Got so many grids. Actually, let's just look at, go over here, look at the NDX. So when we talk about timing, what Katie's looking at is, where are we in the move in terms of the cycle phasing? Are we in a new rising phase? Are we in a peaking phase? But she's focused on the period of risk. So the period of risk is when there's a cycle low timing window, and that is identified based on where we have the idealized low, and we look at a variance of 3 bars left and right. That's our window of the potentiality for another low to form. So we have three phases here, that window, and then there's enough positive price action to suggest that there's a bottom pending, and then bottom confirmed. Okay, so let's just find one as an example of something. So we have bottom confirmed on oil. So obviously it has gone through a process on the timing tracker where Katie has identified the period of risk, then that there was enough positive price action for it to be bottom pending, and now there's enough where it is bottom confirmed. So I'm just gonna pull up CL. I need to grab the grid here. Okay, let me find my grid for CL. Now, every day, the price action can be changing and our charts get updated on a regular basis, but I'm going to use the one that was in the system as of yesterday, and we can look at this. So this is a workflow that I use to help me find setups, and particularly when I'm looking at timing. So if I want to use an aspect of timing to help with my setup when I'm trying to understand the next directional swing, and I want to use cycle analysis to help with that. So here's my level 4 grid for our energy sector, and I'm going to look at CL. So you can see here that CL on an intermediate time frame was coming into a intermediate cycle low timing window for this this cycle here. So this is made up of actually 3 cycles. And so with this minor cycle here, this minor half, and then you have a minor third, but this minor half here was coming into a cycle low timing window. And you can see that I'm going to zoom in, the reversal scout turning up this week. So that's an important thing that would strongly suggest, or it would confirm. Now, even when we say this is confirmed, that doesn't mean something else can't happen. It just means that there's enough technical evidence to suggest that based on these tools, we have to go with the data. And the data right now suggests that there's a cycle low in place on the weekly, and it would be negative if we took that out. So that's why we want to confirm it, because then that helps with the money flow pattern recognition. So weekly, momentum turning up, likely low in place. Go over to the daily. So as Katie goes through the process of identifying the cycle low timing window, and then when something moves to bottom pending and then bottom confirmed. So here's another, this is a larger daily cycle made up of a minor half, came into the cycle low timing window, and now is in a new rising phase coming out of there. So as something comes into cycle low timing, if you're looking at the pattern saying, this looks like it's trying to make a base, it didn't make a new lower low, and Katie identifies that it's in a bottom pending situation, that would likely mean that, this bar here was positive. And then on a 2-hour, you're going to get those indications of, let's see. So here's this. So if I go CL, right here, we get another turn up. So you got momentum on both indicators, turning positive, turning up, and we hit a 61.8 here off of a draw I had done previously. But if you want to use the MCM doesn't have the oil future, but what it does have is USO. And USO, mirrors the oil future, and you can see it went, it was bullish. The 15-minute turned down a little bit, but here's an opportunity where, maybe I look for slightly bullish or neutral as an opportunity to get into. If I was looking at a long side opportunity in USO, if it pulled back, also what I can do is select near term very bullish, or I can even go into the intraday for USO, and you can see it's slightly bearish. So what I can do here is I can say, tell me when it's slightly bullish or bullish, And when it shifts back to slightly bullish or bullish, I'll get a notification, and that could tell me that the next impulse could be underway. And that's really, really important. So if I go back to that, what I'm trying to do is understand, are we going to get when's the next move, that next leg higher? And that's what you can use the MCM to help you with by setting those alerts. All right, so that's an example of using the cycle low timing tracker. And then the last one I'm just going to talk about today is going to be another bias tool, directional bias tool, and that is our ranking system. Okay, we're going to go to the ranking system. So the ranking system's got a tremendous amount of information, and it's very comprehensive. It brings in just about all of our methodology in terms of what you are able to view with it. Now, this isn't live. This gets updated at the end of each close. The MCM is calculating our indicators on a pretty much a minute by minute basis. So this is updated after the close, but it's got longer term, intermediate, short term option bias indicators. So what it does is it's got an algorithm that sums the evidence from these and then gives you a market outlook. And you can sort by market outlook to find, and also by directional bias to see which symbols are either very bullish or very bearish or overbought. So you can sort right on the OBI to see if you like the OBI and that's one of your favorite indicators, you can do that. You can see how that works. And I can sort on that directional bias again, and I can find symbols of interest for myself. And then what I would typically do is go from the ranking system and then jump to the chart, take a look at the chart, and then start to build out my plan. Identify my key levels, identify where my reevaluation areas are for the directional bias, what my outlook would be. But this is a really, really cool system because it does blend so much of our methodology. It also includes in this intermediate time frame, it includes our cycle analysis. So it gives you another couple elements beyond just momentum. So because it's got the option bias indicator built in, it's also got, again, some of the cycle analysis factors built into it. And it does a cross spectrum, from short term to intermediate to long term. So this is an extremely helpful tool as well. It has our complete focus list. There's about 85 symbols in here that range from, major stocks, ETFs, and then major markets. So that's a great tool to utilize as well. It also has cycle data. So if I shift this from off to then on, it might take a second. But what you have in here is going to be that cycle data that's on the chart in terms of timing, dates, and sizing right here for you to view. So you got weekly cycle timing, when are the ranges of time, and you have daily, then you have the weekly bar counts. So you could apply these to your own charts as well. So great information, additional information available with the ranking system. All right, that is everything that I wanted to share. I'm just going to finish up by talking about 30 seconds on the special offer. That level 4 special is still available. You get 37% off. It is a trial, so you get 1 month for $99. It does not automatically recur. We'll likely send you a follow-up opportunity to continue if you so chose. And again, you're going to get everything that I showed today in there plus more. And we do have a very large resource area to learn. Being an analyst and being a trader, it takes a lot, but we're here to help create shortcuts to that knowledge curve and give you best practices to maximize your knowledge development and your overall trading performance. So I thank you for joining us today and wish everybody great trading and all the best.